Hello my friends, this is Doug Fabian. Welcome to my weekly ETF report. Today is Thursday, July 30th, 2015. Thank you for joining me. Three things I want to talk about today: stocks around the world, the US bond market, and commodities. Let's begin by just looking at three exchange-traded funds. Now remember that ETFs are indexes. They just give us a picture of what prices have done, and in these examples, over the past 12 months. We're beginning with SPY. This is the most widely held exchange-traded fund and the most widely held index in the world, the 500 largest stocks in the United States. SPY has been in an uptrend all year. It's up only 2% on a year-to-date basis, but as you can see from this price chart, over the past 4 months, we've been literally trading sideways. The next chart I want you to look at is EFA. This is the EFA index, Europe, Australia, and the Far East. There is no U.S. stock market exposure in this index. There's over 800 stocks in it, and it gives you a picture on how developed markets are doing so far this year. They started out at a very low level. They did outperform the U.S. as I expected, and this particular index is up about 5% on a year-to-date basis, but has recently gone through a pretty good correction, but right now it's above its 200-day average. The last chart I want to share with you is a chart of EEM. This is the emerging market ETF. Again, started the year at a low level, had a nice rally. I was very happy with how EEM was performing, emerging markets. And then over the past month and a half, emerging markets have gone literally straight down. And they're down about 7% on a year-to-date basis. And as you can see from the price chart, they are performing quite poorly. So let's step back and ask ourselves what's going on. Well, the bottom line is economic growth around the world is kind of anemic. It's slow. We just got a GDP number here in the United States, and economic growth is a little bit better than 2%. But there are worries around the world with China slowing down and Brazil in a recession that 50% of the world's economy is barely going to be above the zero line. And this is causing some anxiety in markets around the world. Now let's move to a new market, another asset class, the bond market. This is a chart of TLT. This is the 20-year Treasury bond index. We started the year off very sharp in price. We had a big correction, and we're kind of going sideways. Now, there's a lot of anxiety in bonds. Everybody's worried about higher interest rates from the Fed and whether or not those higher interest rates are going to slow the U.S. economy down even more. So the reason why there's just all this consternation in the world today is because of these factors of economic growth and what's going to happen with interest rates. But this brings me to my final chart, and this is a chart of DBC. DBC is an index of commodities: gold, silver, the agricultural commodities, and of oil, gas, energy. You can see this is in a sharp downtrend. This is in a bear market, and this is because of worries about economic growth. So I really believe, in conclusion, that we're going to be in a tough investing environment over the next 3 months. But we are going into an election year in 2016, so I see any sort of market correction as being a buying opportunity. So I hope this helps you in your investing endeavors. Please send me your questions. Remember, my email address is askdoug@dougfabian.com. Thanks so much for tuning in today.